So today we are going to talk about basic supply and demand. So I just want you to understand the concept of basic supply and demand. There are different ways traders. There are supply and demand traders. Yeah, I'm also a supply and demand trader in synthetic indices. But that is not the kind of supply and demand I want to teach you this morning. I want to teach you just the basic supply and demand principles. So let's look at this material. This material now, I said the price movement. I said the three market movement. So basically, there are three market moves that create the ups and downs of the market. So when we're talking about the market, we're talking about that chart you are seeing moving up and down. So I said there are three market moves that create the ups and downs of the market. They are as follows. We have the uptrend. We have the bullish trend, we have the bearish trend, and we have the consolidation. So, but in supply and demand terminology, a bullish trend is called bullish. It is the uptrend, but we call it bullish. But in supply and demand, it is called rally. So in a downtrend, we call it bearish. But in supply and demand terminology, it is called drop. So when somebody said the market is bullish, and someone said the market is rally or is rallying up, so they are saying the same thing. It's just that the other person is using supply and demand terms. So we have a consolidation, but in supply and demand, it is called the base. So these are the three market moves or movement that create the ups and downs we see on the ForeX chart. So we have the bullish movement, which is the rally. We have the bearish movement, which is the drop. We have the consolidation, which is called the base. So now let's move to the next page. Or I have to launch TradingView. I can use this guy to illustrate. So the next page here is just like trying to show the rally move, which is this one, the base, this one, and the drop, which is this one. So whenever the market is making its move up, it is called rally. At this point, we say buyers are empowering the market, and whenever the market is making its move down, it is called drop. At this point, we say sellers are empowering the market. And in consolidation, we say whenever the market is not making any move or any move down or any move up or down, it is called the base. So these are the only three market move or market movement that create the ups and downs of the market we see, the ups and down movement we see on the ForeX chart. So now let's continue. Let's move to the next page. This next page is talking about the four market movement. So first of all, we talk about the three market movement. Now we are talking about the four market movement. So what I'm trying to say here is that three market movement, which we talk about, which is the rally, the base, and the drop. Now look at this statement. You say these three market movement, when combined together, create the four market move, create another four market move that shape the chart and create patterns of ups and down we see in the ForeX chart, which we call supply and demand zones. So let me open this guy. I can just use anywhere to do my illustration. So let's go back to the page first. So I said these three market moves These three market movement, what are the three market movement, which is the rally, the base, and the drop, when combined together, creates another four market move that shape the chart and create patterns of ups and down we see in the forex market, which we call supply and demand zones. So whenever we talk about supply and demand zones, we are referring to when we combine these three market movements, which is the rally, the drop, and the base together. They give us another form or another shape in the chart, which we call supply and demand zones. So for instance, this is a rally. This move now, let's say the market make a move like this. Yes, this is a bullish movement. But remember, in supply and demand, it is called what? Rally. And then the market make another move. For me. Then the market consolidates here. And then after the short consolidation, the market make another move like this. So if you look at this shape, it is a combination of a short bullish movement followed by a consolidation followed by a short bullish movement. So in supply and demand, this is a rally, this is a base, this is a rally. So when you combine these three market movements together, they give what we call rally, base, rally in supply and demand. And the chart cannot move, the forex chart cannot move without creating these patterns, these up and down patterns we call supply and demand zones. So when I was studying one concept called the business model of the market makers. So the guy that was teaching us, that was early last year, no, last 2 years, early last 2 years. So the guy was like, supply and demand does not work in the forex market. He's teaching business model, and they have their own terminology and their own analogy that they have derived from the market, and that is where that is how they trade. So he was telling us that, oh, supply and demand does not work. Being a student, that time also I'm learning supply and demand concept in synthetic indices. My mentor in synthetic indices is even more successful than the guy, and he's trading supply and demand. And you are here bragging that supply and demand does not work. In as much as it is a market, there must be supply and there must be demand. So if don't talk about what you don't know, what I don't want to make my I've learned some concept where I've learned so many concepts where those people make me to believe that their concept is the only thing that is working, which I don't believe that. There are so many concepts which traders are using to make money. You are not the only one making money. So why must you think your concept is the only best concept? Yes, your concept is good. It's in as much as it's making you money, fine. But that is why if I maybe as of that time, maybe I just paid for mentorship like you did. Now I'm teaching you the concept of Bastra concept now. And it is this Bastra concept that you are going to be used to make money, which is fine. But I was privileged to start, learning on my own, to start wasting time in so many things, which God was using that as an experience for me to gain experience. So I've learned a lot of concepts, which I'm like, for now, I'm not regretting, because it opened my brain so deep to the forex market. So there's no way you can come here and be telling me stories. Even when those guys, there are a lot of people making noise in the industry, but it doesn't really matter. So, but because I know that God knows that I'm going to be a mentor someday. And as a mentor, I have to know beyond what I'm teaching my student. And maybe the person may still want to know one or two things that is not within my strategy. So I will be able to give the person. So I learned a lot of concept and I realized all the concept works. Market pays everybody, irrespective of whichever concept you are using. And you are waiting patiently for you to see what you want to see. So for him to say supply and demand does not work, it's a very big lie, because you can't tell me in a marketplace, you will not be talking about supply and you will not be talking about demand. So, which is why if you look at that ForeX chart, it cannot move without creating supply and demand zones. The market cannot move like that. When you look at the market, if you understand the basic concept of supply and demand, you see that from my statement, I said that these three market moves, when combined together, these three market movements, when combined together, create the four market moves that shape the chart and create patterns of ups and downs we see in the ForeX chart, which we call supply and demand zones. And that is the truth. If you are looking at the chart as a supply and demand trader, you see that the chart cannot move without printing supply and demand zones. But if you are looking at the chart as a trend line trader, so that is why people are looking at the chart with different eyes and different knowledge. But the thing is, supply and demand are the basic things traders need to know, beginners need to know. These are the concepts like support and resistance, irrespective of the strategy you are using. These are the concepts everyone need to know. So we also use supply and demand in Bastra concept. Although we don't trade normal supply and demand, but we know we use supply and demand in different ways. So let's continue. We have the four types of supply and demand. We have two types of demand and two types of supply. So when these three market movements combine together, first of all, they give us, they give us this one. They give us this rally, followed by base, followed by rally. So this is what we call rally, base, rally. And now when we talk about, you see me talking about rally base drop in our fantastic five. So if I'm teaching a beginner trader, I can't jump and be teaching the person fantastic five. So if I'm teaching the person fantastic five, now let's say I'm teaching the person SNRC one, I'm talking about, or SNRC two, and I'm talking about rally based rally, and the person does not know about that, he's not going to understand the setup. Psychologically, he's not going to understand that setup very well. So that is why I always give them the basic knowledge of supply and demand, also the basic knowledge of support and resistance. So by the time I'm teaching them the setup, mentioning strong resistance, strong support, rally-based rally, the person will be able to know. So this is how we follow the course outline. So we have rally-based rally, and we also have drop-based rally. So these are the two types of demand. So this drop-based rally is a combination of bearish movement. This is a short bearish movement, followed by consolidation, followed by a bullish movement. So this short bearish movement is called drop. This one is called base, and this one is called rally, which is why we have drop-based rally as a types of demand zones. So when we talk about supply zones, we also have a short bearish movement followed by a consolidation, followed by another short bearish movement, which we call drop-based drop. All right. And we have this one. Are you there?
Yes, sir.
We have rally base drop, which is a short bullish movement followed by a consolidation, followed by another short bearish movement. So which is why we have the rally base drop, the drop base drop. We also have rally base rally and drop base rally, which is why I said that the three market move, which is the short, which is the rally, which is the base, and the drop. When you combine them together in different form, they shape the chart and create patterns of up and down we see in the forex market called supply and demand zones, which are this very one. So these are the types of supply and demand zones you need to know. So now let's move to the next page. So these supply and demand zones, and normally how traders trade these supply and demand zones is that when you see a rally-based rally zone, we mark this zone like this, then you wait for price to come, then you buy. Take note, I'm not trading like this. This is the basic knowledge of supply and demand zones. So this is what we expect. When you see a rally-based rally, the market will come to this zone, then we buy. When you see a drop-based drop, it is a supply zone, which means that we wait for market to come here to put more supply for the market to drop down. So when you see like this, you know that sellers are empowering this market, and there are more sellers waiting here for this zone here. So which is what is called a supply zone. So we wait for market to come here, and then boom, we sell. So here also, this is a supply zone. There are more supplies here. There are more buyers, I mean sellers here waiting. So when price make mistake to come to this zone, since it is a supply zone or the selling neighborhood, we are going to sell. That is how supply and demand works. So also here, when you see a drop-based rally, the thing is, when you see this thing, when the market drop, you see a little consolidation like this. The next move is going to be aggressive. You see aggressive move with a lot of force like this. When market make mistake to come back to this zone, of course, the market does not move in a straight line. The market wants to come back to this zone to get more strength, more buyers, more buying orders here, which we call which I call it the the buying neighborhood. So we buy. So this is the concept of supply and demand. But I just want you to know supply and demand zones. This is not the way I am trading or will be trading. So now let me clear this chart. So how does this supply and demand zone looks in the forex chart? Because all these things I'm showing you right now, all these things I'm showing you are just lines. How does supply and demand zone look in the forex chart? So supply and demand, the chart is a combination of candlesticks combined together. So this is how the chart is going to look like. This is the rally-based rally is going to be a combination of this is a candle followed by an opposing candle. Here is the red candle. So this red candle is just like a sideways, it's just like a base, then another red candle. So this area here is in a candlestick picture. This is a rally base rally. So it looks different from what we are drawing here. So I just want you to understand how this thing looks on the chart. So this drop base drop is also like this. And drop base rally is like this. Then rally base rally is like this. Rally base drop is like this. So this is how this thing looks like in the forex chart. So we are going to look at these types of supply and demand zones in the chart. So the next page is now how do we mark this supply and demand zones? Okay, before we go to that point, let me show you. This is how they look like. These are screenshot from the market. This is a rally base rally, and this is a drop base drop. This is how they look like in candlestick chart. This is how they look like in the forex chart. So this is a drop base rally, and also this one is a rally base rally, something like that, and this is a rally base drop. So this is how they look like in the forex chart, and we have to know them. And by the time we'll be talking about support and resistance, I will also tell you the difference between support and resistance, and supply and demand, because they look alike, right? So most people tends to be confused about these two concepts. So now let's go to the next page. The next page now is how do we mark supply and demand zones? How do we mark them? We identify them. Oh, this is a rally-based rally. This is a job-based job. Oh, this is job-based rally and this is rally-based job. But how do we mark them for us to uh, um mm, to expect for us to expect opportunities in the market? How do we mark them? How do we mark these supply and demand zones? So, which is the next page. But then, I want to let you know that these four types of supply and demand zones, which is the rally-based rally, the job-based rally, the job-based job, and rally-based job, they fall under two categories. They fall under two categories. When we are talking about job-based rally, it is a reversal category. Job-based rally, I don't want to, let me just use this here to illustrate. Job-based rally can only be expected in a trend reversal. Yeah, it is a reversal category in a trend reversal like this. Why job-based drop happen when the trend has already reversed, happen when the trend has already established. That is why it is a continuation category. Rally-based rally is a continuation category. Job-based rally is a reversal category. Job-based job is a continuation category, while rally-based job is a reversal category. So we expect to see a job-based rally in a downtrend, while we expect to see a rally-based drop in a downtrend, which is the supply zones. So here is where we expect the reversal category, and in the middle of this trend, or when the trend has already established, we can experience a rally-based rally. So in a supply zones, the market maybe is an uptrend. That is where we expect a rally-based drop, which is the reversal category also. Then we can have a job-based drop as a continuation category. So the four types of supply and demand falls under two categories: the continuation category and the reversal category. I hope you are getting my language. Are you
Yes,
there?
sir.
Okay. So now let's look at the four. Okay, this is what I was just trying to explain. Four types of supply and demand. Okay. Now, how do we mark supply and demand zones? So there are different ways traders mark supply and demand zones. There are different ways traders mark these supply and demand zones you see on the ForeX chart. But I am going to teach you how we mark supply and demand zone in respect to Bastra concepts. Shout out to my mentor, Nora Karim, which is the founder of Bastra. So let's continue. I will teach you how to mark supply and demand in respect to Nora Karim recommendation. So there are two ways traders mark supply and demand zones. But we are going to mark supply and demand zone using the intermittent base. We have the full base and the intermittent base. So when we're talking about full base, the full base is that you see this candle. You see this candle. Sometime, let me go to this one here. Sometime, the base candle could be one, like this one candle. Just rally base rally, it could be one candle, it could be two candles. But like let's use this example. So when we talk about when you want to mark supply and demand zones, for instance, I want to mark this demand zones. So I want to mark my rectangular box is going to target this base candle. This is the drop. Remember, this is the base. So this is the base candle. So if I want to mark using the full base method, I'm going to mark, this is the wick. This is the normal base candle. This is the body candle. This one is the week. So the full base that you mark from week to week. So you mark your rectangular box like this from week to week of the base candle. Then you wait for price to return and then you buy. But we mark using what? Intermittent base. Intermittent base, we mark from the body to body of the base candle. So I'm going to mark it like this without bothering about the 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 wick or the shadow of the base candle. So this is what we call intermittent base. So, and we have the full base. Like when I'm trading supply and demand zones on synthetic indices, I mark my key point of interest. I mark my supply and demand zones using the full base. I don't use intermittent base. But this one I'm recommending is based on the concept we trade. So we use intermittent base to mark our supply and demand zones. So the application of this knowledge I'm giving you, I'm going to tell you when we are talking about setup, how we apply this knowledge now to our setup. So now let me show you an example. This is the example here, the full base, week to week, intermittent base, body to body candle, right? So now look at look at this one now. You see, this is the base, intermittent base marking. So this is a drop base drop with my body to body of the candle, rally base rally, body to body of the candle, like that. So this is how to mark supply and demand zone using the intermittent base. So this is the concept of basic supply and demand zones. This is the basic supply and demand zones. Supply and demand zones could be more than this, but this is the basic knowledge of supply and demand zones. What comes about, I'm just trying to give you an idea what comes about this terminology, rally base rally, drop base drop, what comes about, what leads us to different types of supply and demand zones. It's all what I'm trying to explain to you in this particular Zoom session. So now let's go to, it's a very simple concept. So let's go to the chart and see how we can identify supply and demand zones. Like I said, the chart cannot move without creating all these supply and demand zones, which is why we said in that first statement that these three market movement lead to these ups and down we see. So when the market is moving, is busy moving down or busy moving up, is creating all these zones. Why is moving down, or is creating all these zones? Why is moving up? So let's get to the chart. So when we get to the chart here, you see all this one, this is a rally base rally. It's everywhere. This is a rally base rally. This is a rally base rally. This is a rally base rally zone. So when you see a zone like that, what we are going to do is that you mark, I'm going to mark this zone using intermittent base. So I will only mark body to body. So if I want to mark this rally base rally zone, body to body, this is a drop base rally. So if you look at the chart, you will agree with me that it is true that these three market move, when combined together, they create and they shape the chart and create different patterns of ups and downs we see on this ForeX chart. So from this short trend now, we can identify, even here, we can also see another supply zones, demand zones again. Like I told you, if the market is going up, it's creating this zone, it's coming down, it's creating this zone. But I just want you to understand the concept of this basic supply and demand and the types of supply and the types of demand, types of supply and types of demand. We don't care how we don't want to be marking like this and say, let market come here since we see demand. We don't trade like that. Just understand supply and demand. Finish. Then we are going to be applying this knowledge in our setup. So this is what I want you to know about supply and demand. So let's go to another chart. We go to different chart. Supply and demand is everywhere now. Let's let's move here. This one is drop base drop. It's everywhere. So we see rally base drop. So your assignment is to, it's as simple as this. So you mark, let me show you something. Let me give you an example before I end this Zoom session. So if yeah, for instance now, let me use this one. Let me clear the chart. So for instance, this is a drop base rally. So if I want to mark it, the base is not used by one candle. There are situations where you just see drop base, only one candle that will be formed as a base. But this one in the base here, there are many candles here. So if you want to mark using the intermittent base, I'm only using the last opposing candle here to be derived as my base. The last there are many opposing candle here. I mean the red candles before the green movement, before this green movement, which is the bullish movement. So I'm only picking the last red candle before this bullish movement to become my base. Are you getting the point now?
Yes, sir.
Yes, so I'm only marking the last red candle before the bullish movement to be my base, while marking body to body of that candle to be my base. So that is what I want you to know, and that is what you should be marking. So you'll be dropping five screenshot of a sub rally base rally, five screenshot of drop base rally, five screenshot of drop base drop, and five screenshot of rally base drop. That is your assignment for this basic supply and demand concept. So if you have question, you can ask.
Okay, sir. Sir,